Welcome to TradeTheMBI.com. This is John's report for the 30th, end of September. And, well, I guess we should just take a look at where we started in September, which would be right here. And we're going to finish just below where that was. Well, maybe not finish because we have the potential of just coming right back to where we were. And we started out a little bit of an improvement, and then the wheels fell off the bus. There was all this concern about Deutsche Bank and various other things. But in general, we talked about it. I'll go back to the chart anyway because we didn't like what we were seeing configuration wise. We had the failing. We thought we might get a dip of the orange below, but since it was caught in this gap between the cyan and the red line here on the DOC, we always call that a continuation short signal. So that's all it's done, and that's all we've gotten. And I know despite the nice pump, we haven't gone anywhere. And you can see likewise NQ flat, not doing anything, and we were waiting for the Dow to actually catch up. Didn't happen. So Dow still suffering a little bit weaker than others. If you compare the Dow already back pretty close to the lows right there that it's already achieved. Still a little bit further to go, but if we look at the ES, got to come all the way down here. So big discrepancy. Just visually, you can see the difference. Percentage-wise, it's significant enough to be problematic because if you don't have them all in sync, then what we have is money moving from one spot to another, and that's part of the speculation. I think we're going to continue to see that rotation. Gold, like I talked about, we need to revisit the dip below the red line here from the extreme histograms, which would have taken us right down here into the 24 range. We're right at 126. A little bit of improvement and some safety went into there as the market was plummeting, but still it's heading lower there. And below the green line, though, even though it's below the green line, a move back above it certainly would be playable. And let me give you the value on that because we're looking at those ABM. It's at 126.23, so moves above that point are your turnaround signal. And you have obviously the white ABM moving all the way up. That's the easiest way to play the turnaround. The rise in bonds on the idea that the Fed is not going to be raising any rates is unsustainable, but needless to say, we're showing some decent success, except for it got rejected right here at the peak, and putting in a number 3 there. I think we're probably going to see some more trickle back down because it's just not a sustainable value unless we move to some type of negative rate or completely back to zero. Europe, it's not going anywhere. It's in stasis, and like we said, you're going to have various polls coming out, and then as any changes in probabilities affect allocation, that's where we're going to see kind of movement increase the chart. Just a little oil, nice rise back up. Obviously, the idea that OPEC is going to limit production, there's still effectively going to be a ceiling on oil, simply because of the fact that at any price points we get beyond, from a future standpoint, into the 50 or 60 range, shale is going to come online and overwhelm the market with supply. There's no way around it. So from 50K standpoint, we saw the ES right here back on the S&P. We had a double buy that sold in the slight dip that came through there. It was still an average up situation. Then it bought again, and that one just slightly better than break even as well. On this latest dip, bought at the bottom of it again. It's a little premature potentially, just a bit. So if we look at the case chart, we can see that we had the nice basing. Started up as we were looking at the other day, and then wheels came off the bus. It shows up better here on the 5K. So end of the day, we ended up with our number 1 that came through here, and then the breakdown began. It was a little bit slow, the soft dip, 8 or 10 points, came back, and then boom, that's when we ended up with a nice 20-point dip. And then we talked about this reading right here, where we had the dip of the orange below the red, with the steel all the way above plus 13.5, and so the trigger is when it dips below 7.5. Well, in this particular case, not only did it dip below 7.5, but at that point, the orange is crossing the cyan, which unfortunately really isn't going to be a good indication. What's even worse for it, though, that really was an indication is the histogram from the shakeout indicator moving below the yellow is a no-go on that trigger. And rightfully so. Fine, it did move back and forth enough, but ultimately started to cascade lower. extremely low. Now, the secondary signal that took place right here, much cleaner because you had the dip below the red line. When the steel came below the 7.5, which was right here at the signal line, you were also above the long algo for a beautiful long signal at 2142. Potential of a short signal until all the way up there at 2151. Really kind of languished around and back and forth in between, slightly down in the after hours particular point. But overall, not an unexpected weakness. It's just the things are going to be more news related at this particular point because there's this delicate nature of where should they be allocating money at this particular point, given the nature of the election being closer than expected, as some would describe. Though I don't think they're seeing any change at this point in what the likelihood of the outcome is. I will have indicators set for sending out tomorrow, Friday, and I will be sending out also emails for the renewals. If you didn't get one, then you can always let me know, and I will make sure that you get the link. As always, though, to look for me on the Skype chat. Trade well. We'll talk to you later.